we detected an unusual trade worth $1.3 million on Ondas Holding stock, ticker symbol ONDS. But here's what makes this even more interesting. The stock just hit a new 52-week high. So the big question is, will it continue breaking out to new highs or drop back down? According to technical analysis, the stock is very overbought, which could signal a major sell-off. But with this kind of momentum, it could just as easily keep climbing up higher. That's why technical analysis can be useful, but it can also be very confusing. And that's exactly why we also look at the data to see what wealthy investors are actually doing with their money. So in this video, we'll analyze this unusual option activity to figure out whether this wealthy investor is bullish and buying, expecting the stock to move even higher, or bearish and selling, expecting the stock to drop lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into our analysis to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. Now, if you are in our membership, you've already started to profit from Ondas stock. That's because we entered a trade position just a couple of weeks ago on this day, August 15th, when we first detected an unusual trade on Ondas stock. And ever since then, the stock has already gone up by about 60%. What's really interesting is that before this stock took off, a wealthy investor bought stock options as we were tracking their trades. As you can see here, this was the email we sent to members alerting them of unusual option activity detected on August 15th. And so we analyzed those unusual options being traded in Ondas stock and went long bullish when the stock was trading around $4 per share. Now it's trading at $5.86 per share. So it's already a profitable trade because we got in early. And so if you want to start getting full access to these profitable trade alerts, including these email updates, consider joining the membership on our website. We'll put a link here. Keep in mind that if you join the membership through YouTube instead of through our website, we cannot email you these additional trade alerts because YouTube does not share your email address with us. So make sure to join the membership through our website, where you'll get full access to the trades of wealthy investors and potential insiders so you can see what the smart money is doing before the trade becomes highly profitable. Now, speaking of profits, the real question is, how much did this options trade actually make? Because knowing the exact profit is what allowed us to roll the options with a smart risk management strategy. So let's take a closer look at our trade, the same one made by this wealthy investor. These October 17 options at the 7.5 strike calls. This investor bought 10,000 contracts at a price of $25 each. Since options prices are shown here, and each options contract controls 100 shares of stock, to get the dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each options contract costs $25. And so let's take a look at how much these options are worth now. As we can see here on the option chain for the October 17 options at the 7.5 strike calls, these contracts are now worth between a bid price of $70 to the ask price of $75. And remember, these options were only going for a price of $25 each when we entered this trade. That's why it turned into such a profitable trade. So how much return on investment did this deliver? Well, let's take a look at our trade using the risk profile graph, analyzing those October 17 options at the 7.5 strike calls, which were priced at just $25 per contract when we entered this trade. And so on this graph, our profit or loss shows up here. And the x-axis represents the share price of the stock, which is currently trading over here. And the y-axis represents the amount of profit or loss. Keep in mind, this graph already includes the cost of the trade. That's why you can see in the blue line that if the stock had dropped down, it would have been a negative $25 loss per contract. But instead, it went up to over here. So we have a profit of about $49 per contract. And so to calculate the profit percentage, we take $49 divided by the initial cost of $25 and then multiply by 100 to express it as a percentage. And that gives us a return of 196% profit in just a couple of weeks. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. So if you want to get access to deep insights like this, then just head over to our website. We'll put a link up here where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not all trades by wealthy investors are winners. Some end up as losses. That's the reality of trading. And so to stay consistently profitable over the long run, we use strategies with a better risk to reward ratio to maximize profits and minimize losses. So as a real-time example, let's go over how we used new data to update our trade here into a strategy that gives us more upside potential while keeping risk under control. As you can see here, on the options time and sales tape, the most unusual trade happened on August 29th at 12:18 p.m. at the 13-second mark for these October 17 options at the 9-strike calls. Thousands of contracts were being traded, and they were also being traded at the same price of $39 per contract. And so we can calculate the total cost this wealthy investor spent by multiplying this price per contract by the total number of contracts traded. And so how many contracts did they actually trade? Because it's not just a few thousand contracts that you see here. There's more than meets the eye. That's why we always take a closer look at the data to improve the accuracy of our analysis. So let's check the option chain for these October 17 options at the 9-strike calls. And we can see here that 33,970 contracts were traded, spiking the volume significantly higher than the existing open interest of 0 open contracts, which tells us these were new contracts being opened, not existing ones being closed, because it would not be possible to close out any contracts if none were opened previously. We always take this extra step to verify the data at a deeper level, because many other websites and scanners don't. They simply report all high-volume unusual trades without filtering out closing trades, which leads to wrong results and losses for those following unusual option activity. And that is why our deeper analysis gives us more winning trades than other websites. And in this case, it confirmed that this wealthy investor was opening new contracts. Now, keep in mind, some of these contracts could be other traders jumping in, including ourselves and our members. But to estimate the cost of this unusual option activity, we take the volume of contracts traded, 33,970, and multiply by $39, the price we saw on the options time and sales tape. And this equals a total trade size of approximately $1.3 million for this unusual option activity. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. Now, with that said, even though this trade carries higher risk, we still took it But that's because we used a risk management strategy to lock in profits while simultaneously reducing exposure. As you can see here, we rolled into this new position at the 9 strike calls from our previous position. POS stands for our position, and the green color indicates a buy position. And so we started closing out these 7.5 strike calls by selling them, locking in profits, and rolling to a higher strike price. So we used our gains from our previous position to buy these 9 strike call options, which cost less than the amount we sold the previous position for. That means we entered this new trade at a credit, not a debit, reducing our risk by using profits from our earlier trade. And so when we analyze our trade now, you can see here on the risk profile graph, the buy position cancels out the sell position because they are the same October 17 options at the 7.5 strike calls. So we are just left with the 9 strike calls that expire October 17. And so on the graph, we can see that if Ondas stock goes down or even crashes, our trade would not have any negative loss because we've locked in more profits than the cost of our new trade. This is how we manage risk by minimizing losses, and in this case, we completely eliminated any possible loss while still staying in the trade to gain more profits if the stock moves higher. But remember, this was only possible because we followed that wealthy investor early, back on this day, before the stock surged 60%. So if you want to get access to our analysis and alerts, just like this one, before the stock took off, then sign up on our website. We'll put a link here. Because the next time a wealthy investor makes an unusual trade, you'll want to be in early, not chasing after it's already gone up. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.